All right, we are back. I didn't change anything past 2 weeks. I pretty much sticking with the same strategy, but I completely changed how I approach it though. And I made this small shift that I'm going to show you that made me way more consistent, especially dealing with this. Like past 2 weeks, as you can see, that's the Nasdaq daily chart. It's just been printing barcode central. When I see this, let me just remove the drawing. When I see this, I see pain. I see blown account. I see heartache. I see people that just want to leave trading and never come back. I see adversity. And when you see adversity, there's always a seed of either equal or greater benefit to that adversity. You either adapt or you just get completely wiped out. And I had to adapt. I had to adapt. I had to make few changes that helped me see the market better and overall help me pass more accounts and get more funding and get more payouts. And I put that theory into test yesterday. So as you can see, this one, I'm gonna refresh it for you so you can see. I got this account last night and I passed it in one day with 100% win rate. And I only took about 7 trades. As you can see, they were all base hits. Let me see if I can show it. Let me see if I can move my face so you can see it better. Here we go. Yeah. So as you can see here, we took about 7 trades. One of them was a break even, and we passed the whole account in less than 2 hours, in an hour and a half. So 7 trade, 100% win rate. Got it last night, passed it this morning. With all the choppiness, with all the craziness in the market, and I'll go over the changes that I made. So we took a short on a gold, and we took a short on NQ, which was break even. Then we took another short that was a base hit 300, 200. Then a long for 300, another long for 400, another short for 661, and another long for 236, all with only one contract. And this is if you're wondering, this is TradeSea. Let me just remove the drawing. This is the TradeSea. This is the new platform that you can trade with if you choose a rhythmic plan with the lucid trading. I think Tradeify has it too. But I absolutely love it. This will change the game. This makes TradeAway look like an old relic from the medieval times. It's absolutely flawless for now. Hopefully they stay the same way. Hopefully they don't change anything about it and keep it robust like how it is right now. It's great. Like I can't find a single flaws about it. It's absolutely great. It's like it's like a Top Step X merged with TradingView and added the same responsive and execution time as well to chart. So it has all those 3 elements in it. Fast and clean executions, just overall easy drag, take profit and stop loss immediately. And my favorite is hotkey. If you're a scalper, the hotkey will save you. So you can buy and sell at the exact moment that you see at the exact price that you like to see. Risk setting, you can go to your risk setting just like how you would do in a Top Step X. You can set, for example, $300 or $500 or $1,000 for the day, however much you like to lose an account. And you can click on liquidate and block, which will liquidate the position if you hit that much daily loss, and it will block you until the next day. So it will protect you from your own emotions of revenge trading and overtrading. And it's pretty self-explanatory. It's pretty much TradingView and Top Step X combined. It's so simple. It's so clean. Like you don't even need training or anything. And it has a very, very clean interface. You can easily go in there. You can go journal your trades. They give you a score, win rate, and all that. Of course, I just passed. I just have to convert this account into a funded. But that's it. It has an AI that you can put in your strategy in, and you can backtest your strategy with it. It gives you all the news and everything else that's going on. It's just perfect. It's absolutely perfect. I have a lot of lines here because I've been trading this price range this morning. And the things that I was going to talk about today are this thing. So, update on the TradeSea with Lucid. So, I went over that real quick with you guys. 15 minutes cycle. So, and then why break even trades are good, how to be okay with missing trades, because this is like messes most people up. When they have a break even trade, it makes them angry and they end up blowing the accounts. Or they miss out the trade and then they hop on the next opportunity, the next not so good opportunity. And then I made a small adjustment into 15-second and 30-second time frame for my entries on extreme moves when the volatility is extreme. When I trade Asia market, when the market moves a little bit slower, I don't use 15-30 second. And how to use a stochastic, so in the range market. And by range, this is what I mean. Like when you're in this range, that the market is just it just does this. It just grabs liquidity, goes the other way. Grabs liquidity, goes the other way. Grabs liquidity, goes the other way. Like it stays in the tired range. A stochastic a stochastic helps you with a range market, and also it helps you with the strategy that we use, which is like CCT, candle continuation theory. Like when the market is going up like this, or when the market is going down. So it'll help you on both ways. It'll help you when the correction is over, and it also helps you looking at it from a different time frame and have a higher understanding of how to actually use it properly. And last but not least, the most important change that I made in the past 2 weeks. First of all, I was sick past 2 weeks, so that's why I didn't make a lot of YouTube videos. I still traded even though with all the sickness, but I had to make these adjustments. And the last one was trading. I was always a very aggressive trader, not so much of a defensive trader. So I had to make my trades very aggressive, but have a very, very defensive approach to pass the accounts. And I only do that when I trade an evil phase, evaluation phase. When I go to the funded stage, then I still trade them a little bit aggressively with a lower size, but I still trade them very defensively. I'll show you some examples of it. Let me see. So I still look at the chart on TradingView because this is the only thing that you cannot have that on TradeSea. You cannot have this custom built indicator, which is called higher time frame ICT. So I still have my TradingView open to see the action, to see what's going on. So today when the market opened, this is what you were dealing with. So this is what you were dealing with. Extreme choppiness up and down. We are getting inverse for rally gap, chopping, grabbing liquidity, leaving liquidity, going up, chopping down again. And some of these 1 minute candles are like 200-300 ticks. How are you gonna trade a 200 and 400 tick candle move? You can't. You will get obliterated. And this is where a stochastic comes handy. A stochastic indicator. So it's a free indicator. You can have it, and don't mess with the setting. Just use it. Use it with whatever setting that comes with. Same goes on TradeSea. I have my stochastic open here. That's why I really love this platform. So um, whatever indicator that TradingView offers, These guys have it because it's literally integrated. Let me go over the trades that I took. Let's see if it takes me to those trades. It does. Takes you to the exact trades that you've taken. Let me see if I can show symbols, execution. Let me see if it shows the executions. No, it doesn't show the execution, does it? No, unfortunately, it doesn't show the execution. I'm still learning this whole thing. Yeah, I don't think it shows the execution. Let's see if I can show it in here. Anyway, so we had these areas right here this morning that I was looking to trade. Oh, it's right there. Never mind. So this was the first trade that I took this morning. So as you can see on the stochastic, the price, every time we go to a kind of quick explanation of a stochastic and what it is. So it pretty much shows a two lines, which is like blue and orange, or you can change the color to whatever you like. So one is called the K value, one is called the D value. So every time we are in a overbought area, and it changes depending on the time frame that you use. So if you use the hourly, you can see the hourly levels. So you can expect certain thing if you're in hourly, daily, or 50-minute. So the way I look at it is, if you're in hourly, for example, let me see if I can find a good example of this morning. So yeah, this morning we were on the hourly, and I'm seeing that we are going down, and the overall price is also going down. So we have these targets to go hit. And at the same time, this one shows me that we still have room to go. Then I go down to 15 minutes, and I see we're already on the oversold area. So when you're in the oversold area or overbought area, you can kind of expect the price to start either rejecting or going down for a correction. Then I look at the 5 minutes, and I see the same thing. And it was right around here that I saw that we broke through it, and we were halfway through getting into the oversold area. Went to 1 minute. And the reason why I took my first trade on gold was because as you saw, NQ was absolutely horrendous in the morning. So I had to switch to gold. I was like, you know what? Let me just start with gold until NQ figures it out. And that's what usually happens when you get a super choppiness from 9 a.m. until like 10:30ish, until like 10. After you're done with the choppiness, then the price becomes very clean on Nasdaq. That's how it's always been. Um, so around here, as you can see on the stochastic, sometimes we go to the halfway through and start rejecting it. But you won't be able to see it as clearly or as good. And that's why I start adding 30-second and 15-second to my arsenal of confluences. So it was somewhere around here. Let me see. Yes. So it was somewhere around here. I was looking at, so this was my area of interest. So it was right here, and it was right here. So this is still the candle continuation theory, because we are going down, correction, going down, correction, going down, correction, going down. And as soon as I saw this, I was like, okay, we are stuck in the range again in here. And as you can see here, we went to the overbought area. As soon as it's over 80, that area is known as overbought. As soon as you're below 20, this area is called as oversold. So the way you can use this, you kind of see it like this area when we went up, This area, you can kind of see that we are chopping around at the same time we are chopping around here. So we know that we are either due to a continuation of this trend towards the downside, or we are due to some sort of correction. Regardless, like you can either catch this move or you can catch this entire move. You can gamble and try to catch the entire move. But on the 1 minute, it's not clear enough, especially during high volatility hour. So if you go to 30 second and 15 second, somewhere around here, you see an opportunity, and there was an opportunity here that I took. So I got in here. I put my stop loss somewhere around here. I put my take profits somewhere around here. I could have targeted this whole liquidity, but I didn't want to. And this is what I mean by aggressive but defensive. So this is a very aggressive trade. My stop loss is extremely aggressive. My sizing is extremely aggressive because I'm trading a whole one gold contract, which is like $10 value on tick. The price goes up and down like that. So I'm monitoring as the candles are printing. I wish the backtesting would show you how the candle would print. So on the next one I see, and I'm monitoring, I have my hand on the stop loss button. I don't think this was the trade. Let me see. Oh, this was the trade. Tripping. Let me see. 954. 904. This was on the wrong time frame. I didn't take any trade at 9 a.m. I think my TradeSea is on the wrong time frame. No, it's incorrect. Anyway, I remember taking this trade. So I got in on this trade. Stop loss went over here, and I remember I made somewhere around that much. Let me see. Compass trades about 1100, yeah. So I think I was targeting somewhere around here. I was actually targeting here, but since I dragged my stop loss, it went the other way. So, and then these candles, it shows you that it's red, but it was extremely volatile. It would get blue, then it would get orange. It would get blue, then it would go orange. And I'm monitoring this. And as soon as I saw this, I moved it to break even. And I'm okay with the price coming and hitting me back. Look, this is 15 second, 15 second, 15 second, 15 second. That is a 1 minute candle. That is 100 tick 1 minute candle. That's $1,000 1 minute candle if you trade one gold contract. And you can't do that. That's not feasible. That's why you have to like switch to a lower time frame and trade them a little bit aggressively with a bigger size, but very quickly move your stop loss to break even as soon as you see this. And as the price is going up, and then when the price goes up a little bit, I'm moving my stop loss a little bit. I'm constantly moving my stop loss around here. I believe I moved my stop loss somewhere around here. And on the next one, I think it took me out. I was like dragging my stop loss somewhere around here. It took me out because and I'm at the same time I'm monitoring the stochastic chart on the 15 second. When I see a quick rejection around the oversold area, now I know it's time for me to get out of the trade, get out of my base hit, and get in and get out. And that's how I treat all these. See, I only had one break even with the same strategy, so I didn't lose any trades. 230, 300, 400, 600, 236, and I was able to pass the account just like that. And that's it. If you think that's too simple, it's as simple as that. Let me see what else I was gonna talk about. Do I have my note in here? I think I lost my note. Let's see. Do I have my note in here? I do not. But anyway, so oh, wait for 15-minute cycle. That's one of the things I was about to talk about. One of the things that you notice, I have this 15-minute higher time frame candle available on this side. And so many times I've seen that right before a 15-minute closes, the new 15-minute candle, it does a quick, tiny manipulation and it will take you out of the trade so quickly. Meaning, if you're at let's say 657 or 627 or 642 or 613, 612, when you're approaching the end of a 15-minute cycle, do not get into the trade. Do not get into, let's say you're trying to trade these upward candles. And this is a 1 minute to 15-second, 30-second candle. Doesn't matter. Let's say your entry is, here because we broke out of that area, and this is your take profit. Oh, sorry, the other way around. Let's say you're doing something like this. So many times I've seen at the end of 15-minute cycle, when the new 15-minute cycle opens, the price does this nasty wick down to this internal liquidity and then continues straight to the take profit. I've seen it so many times that nowadays, every time I look at my setup, I look at the time frame. If it's within closing of a 15-minute cycle, I do not take that trade, no matter how good it looks like. I was burned way too many times past couple of weeks, just seeing the same thing over and over again. And that's why I was able to dodge some of the losses. I took a base hit here, base hit here, and that one was a break even. And these 7 trades, out of these 7 trades, 4 of these trades, the price jugged me the exact same way. We were on an uptrend. Let's say this is your entry, because this is what I teach. So I see right before the 15-minute start, we are about to go down. And this is how I used to trade. I used to get in here for a quick base hit and go up here. And so many times, as soon as the 15-minute opens, like let's say if it's like 6:30 or 1 o'clock or 9 o'clock, doesn't matter. You get the idea. 15-minute cycle opens, it go ahead and grabs that internal liquidity, or go ahead and grabs even more flush a little bit more, and then goes straight to my profit. So nowadays, I'm able to dodge it just simply by looking at the time. When I see the setup, I'm looking at the time, and then just go back test it, look it out for yourself. You are going to see what I'm talking about. So that was one of them. And be okay with break evens. I had to wrap my head around being okay with break evens, because a lot of times you take a break even, it pisses you off, it makes you angry. And what do you do exactly right after? You go and take a bad setup and lose it. And you spiral out of control. Same goes with missing trades. If you've been trading long enough, you probably see and notice what I'm about to talk about. Be okay with missing a trade. So if you miss the trade, usually the trade that you missed, that was a good trade. And the market doesn't give you 2 A+ setup in a row. Usually market gives you a 1 really good A+ setup, and then it gives you a really bad setup, then it gives you a A+ setup. That's why people, when they miss a trade, they try to get to the next possible opportunity, and it's not good. And they end up losing and getting spiral out of control and end up blowing the account. It's just this one thing, if you remember, it'll save you a lot of pain and headache. When you miss a trade, they're like a bus. When you miss one, the next one always comes, especially if you're scalping, especially if you trade like I do. You get 20 opportunities in the same day with the same strategy. as long as you go down on the lower time frames, unless you do swing trades. Then that's a different story. Same goes. Doesn't matter if you do swing, intraday, scalp. Usually the first A++ opportunity, if you miss that opportunity, be patient. The next opportunity is usually not good. Usually you have to skip an opportunity to get to the A+ setup again, because the market doesn't move as cleanly. It gives you one good one bad one, and then a good one again. So let's see. I'm looking at my notes. Cover that, cover that, cover that. The 15 and 30 second with a stochastic. I went over that, how to use that. And the range bound market, yeah. So if it's a range bound market, it's actually very simple to use. You go down to 13, 30 or 15-second candle. And this is beautiful. You have a liquidity in here, and you have a liquidity in this area, you'll have a liquidity in this area. That's why I like to color code everything. Like my previous day high is different color, my week opening is different color, my indication is different color, so I can visually remember and see. So when the market opened, market jumped up, we rejection, 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 and you can kind of see in here. You can kind of see as soon as it comes back to the range, right around here, whichever one it is, you can just sell. Sell and either target halfway through for a base hit, like from here to here. That's 200 ticks in like 1.5 minutes. You'll be done with your base hit, or target the entire liquidity range, which eventually hits after like 5 minutes. It's simple. Or it gives you an opportunity. It comes to the 50% range and it continues to dump, and same way the other way around. As soon as it start rejecting the same area, you start looking for opportunity. When you see 2 consecutive candles, which is still within our strategy, candle continuation, we are still going up. So you're just filtering a choppiness, and you're adding a layer of confluence on when to get in. Not clean, not clean, not clean, not clean, not clean. Oh, look at that. Nice quick correction, and it gives you a nice quick confluence here back into the range. You will get in here, stop loss, super tight stop loss. Super tight stop loss, aggressive way of trading. That's about 200 tick, or you can target all the way up there, which is 300 ticks. And as soon as you got two or three candles, you drag your stop loss to break even, and you cover your 1-to-1, which is around here. Instead of hitting the break even, you just cover your 1-to-1 and you just get to the next trade. And it's easy, quick, and it's just the basic just stacks up. Let me see what was the next one. Yeah, that's pretty much it for the day. I think I'm pretty much covered everything that I needed to cover for the past 2 weeks. So I'll see you guys in the next video. And before you go, you can always join the community. It's a free community. People are passing their accounts, they're getting payouts. If you go to the wins area, yeah, so people are doing forex, and this applies to forex or any other asset. People are doing it on the forex. They're posting out their payouts. They are posting out their funded accounts. Yeah, it's just good stuff. And if you need a one-on-one help, you know how to find me. You know where to find me. There's always a link in the bio. Apply, and we're gonna see if you're a good fit. That's pretty much it. Hopefully I can make more videos, more daily videos from now on, that I feel better and I trade better and I have a little bit more time. Hopefully I can do that. But with the work, it's been difficult. I've been very busy at work. That's pretty much it. Love you guys, and see you guys in the next one.